Buffett manage his portfolio? Question 2.
As I dictate the questions for Warren Buffett, I cannot help but wonder how I've moved heaven and earth for this article. It's possibly the biggest article in the career of Lois Lane. I've met Charles Munger, John B. Williams, Philip Fisher, and Ben Graham, people who influenced Warren Buffett. Now, I'm driving to my final interview. The man himself, Warren Buffett.
Mr. Buffett?
Louis! You must be Louis.
Yes, I am.
Ben, Charles, and John warned me. What can I do for you? Please, have a seat.
So, Mr. Buffett, could you share with me how do you manage your portfolio?
No mood for small talks, eh? Well, first, I never followed day-to-day fluctuations of the stock market. And second, do not try to analyze and worry about the general economy.
How about your strategy in managing your portfolio in investing?
There are two common strategies to manage your portfolio. First, by using an active management is a strategy adopted by portfolio managers to buy and sell stocks intensively. Second, index investing is buy and hold passive strategy, a deliberately designed portfolio of the common stocks to mimic the behavior of specific benchmark index.
Okay. Do you invest in fixed income security or stocks?
Well, I invest in fixed income securities as well as in the stock market. I invest in short-term and long-term fixed income securities including cash, bonds,
The name's Bond. James Bond.
and preferred stocks. The debt market includes corporate and government bonds, convertible preferred stocks, and even high-yield junk bonds.
Okay, got your point. Could you share with me your strategy in investing a common stock?
Well, I look for margin of safety, commitment, and low prices.
I see. I often heard about buying stocks at Buffett's standard, your standard. What is your parameter in investing in a common stocks?
All we want is to be in a business that we understand, run by people that whom we like, and priced attractively according to their future prospects.
Can you teach us in brief about each of the tenets?
Well, of course, that's the first reason you came up here, right? It is important to maintain a high knowledge within your circle of competence. I choose company with a steady track record who did not change their business decision because the previous plan didn't work. I look for franchises.
Yeah.
A company whose the product has no close substitute, need and desired, and is not regulated. These stocks tend to generate high return on their invested capital.
So Charlie, I believe you are in partnership with Berkshire as a chairman. Given your background as a lawyer, do you find any difficulties in investing?
Actually, that's my competitive advantage. I bring low acumen to investing. There are three basic characteristics of business is fair. First, a business must have a simple and understandable. Second, business must have a consistent operating history. Last, business must have a favorable long-term prospect.
Rationality is the quality in deciding what to do with the company's retained earnings. Retaining earnings to be reinvested in the companies at higher level than cost of capital is completely rational.
I see.
I was greatly appreciated managers who are able to get along with the shareholders and those who inform the performance of their company honestly without hiding behind generally accepted accounting principles or GAAP, who shared mistakes and success, and who in always candid with the shareholders. Institutional imperative means that the lemming-like tendency of corporate management to imitate the behavior of other managers, no matter how silly or irrational that behavior may be. In evaluating people, you look for three qualities: integrity, intelligence, and energy. If you don't have the first, the other two will kill you.
So Philip, as an expert in the securities analyst, specialized in innovative companies driven by research and development, what characteristic of the company's management that you are considered when buying an investment?
Yeah, I believe there are three important qualities that any senior managers must display. First is rational management. Second, honest management. And third, resist on institutional imperatives.
Would you share with us about the financial tenets? This is the most important and interesting part, don't you think? The profits.
That is totally true. Financial tenets is the core value of investing guideline that you should master on. It is not only about the profit. There are four financial decisions that the company must maintain. First, we must focus on return on equity. All marketable securities should be valued at cost instead of market value. Values in the stock market as a whole can greatly influence the return on shareholders' equity. A business must achieve high returns on equity while employing little or no debt. Second, I prefer to use the term owner earnings per share instead of cash to measure the value of a business. By adding up net income, depreciation, depletion, amortization, less the amount of capital expenditures, and any additional working capital that might be required. Third, we must focus on high profit margins. Great investments in businesses must be able to convert sales to profit. Managers who operate business in high-cost operations tend to find ways that continually add to overhead. On the other hand, managers who operate business in low-cost operations are always finding ways to cut expenses. An ideal investment must be able to generate each dollar of retained earnings into at least $1 of market value. The company's market value will be increased if the retained earnings produce above average return.
Then what is your major considerations to make superior profit in your investment?
Usually I look forward to a company that can create at least $1 of a market value for every dollar retained. I would be impressed to a company producing above average return and able to grow sales over the years at the rates higher than industry average.
Interesting. And the last one is value tenets. Why do you think that we have to create value if we know that the business already considered a high profit margin?
And last but not least, in order to create profit, we must buy stock price at value. First, determine the value of the business. The value of business should be measured based on its intrinsic value. The methods to measure the value of business are various, including low price to earnings, low price to book values, and high dividend yields.
So John, how do you determine the intrinsic value of the business?
Well, simple, Ms. Lane. By using dividend discount models, there are two things. The first one, net cash flows expected to occur over the life of the business, discounted at an appropriate interest rate. And the second one, to discount those estimated cash flows to allow for some uncertainty.
And then, we must buy stocks at attractive price at the right time. My goal in the business is to identify that it produces above the average returns, and to purchase business at prices below their indicated value in order to gain a margin of safety. I invest only when the price of the stock is right and the time is right.
Good afternoon, Ben.
Hi, good afternoon. How are you?
Nice to meet you.
Nice to meet you too. Please have a seat.
Thanks. So, Ben, how to define margin of safety in your theory of analysis?
Okay, the essence of security analysis is a well-chosen of diversified portfolio of common stock. Secondly, it's based on the reasonable price. And thirdly, it can be considered as an investment. True investment must have two qualities. First is some degree of safety principle and satisfactory of rate of return. A rate of return is not only include income but also price appreciation.
That is very true. May I know how do you apply that in your business?
In business practice, Berkshire Hathaway's incorporations refers directly to own a business to influence the critical issues in a company, which is capital allocation. The most distinguishing trait of investment philosophy is that the clear understanding by buying shares you own a company, not pieces of papers. Therefore, the four tenets, business tenets, management tenets, financial tenets, and value tenets, become a critical issue in investing.
What's your tips for investors?
We must focus on investors' golden rule. First, concentrate your investment in outstanding companies. Second, limit yourself to companies you truly understand. 10 to 20 is good. More than 20 is asking for trouble. Third, pick the very best of your good companies and put the bulk of your investment there. Fourth, think long run. 5 to 10 years minimum. Volatility happens, but we are investors. Carry on.
I think I have all that I need. Mr. Buffett, thank you so much for your time.
You're welcome.
Have a nice day.
Have a nice day.